Hey guys, how are you all? So I'm back with my videos. So from this lecture we still start our journal topic. I know it is a longer time, but I'm sorry for the delay. Let us start now. So before starting the journal, I would like to remember you the what we can say golden rules of accounting, which are personal account, real account, and nominal account. These are the three golden rules of account, and we are, of course, I'm sorry, yeah, and of course we are going to see the golden rules here. First, before I'm writing, you need to see yourself what are the golden rules. Personal account rule: debit the receiver and credit the giver. Okay. Real account rule: debit what comes in and credit what goes out. Nominal account rule: debit all expenses and losses and credit all incomes and gains. These are the three golden rules of accounting. Okay, I think I have remembered that one now. Then what we are going to discuss? We are going to discuss some sort of transaction, some sort of topic which deals with cash transaction and credit transaction. These are the two topics I would like to discuss, which is cash transaction and also credit transaction. What does it mean by cash transaction and what does it mean by credit transaction? Okay friends, then what does it mean by cash transaction? Simply dealing with cash immediately. That means immediate transaction that will be completed by giving the cash or by giving the check through account pay check, or you can say UPI. Anyway, immediately completing the transaction shall be deemed to be cash transaction. Cash transaction doesn't mean that it is always involved in cash itself. That means in money, that in rupees itself. That rupees in the sense by giving that some notes or any coins. Not that doesn't mean that only coins or notes. It also means check or anything immediate transaction. That means completed, the transaction shall be completed immediately. I'll write here that cash transaction in the sense transaction should be completed immediately. Transaction completed immediately, friends. Okay, yeah, transaction which is completed immediately through cash or check or UPI, etc. Immediately transaction will be completed. So one more thing here in this cash transaction, the name of the buyer or seller, is not required. Okay, why I have written the name of the buyer or seller is not required here? Simple things, simple friends, simply guys. When you go to a market to buy some vegetables, okay, when you go to market to buy some vegetables, do you ask what is the name of the vendor? No, right? Immediately you will pay the cash and you will be taking the vegetables with you directly to home. Okay, then will you be seeing your name to that vendor? No. That means both parties names are not required to complete the transaction immediately. Is it correct? Yeah, these are the two simple things that is related to cash transaction. But when we are going to discuss about credit transaction, I am going to write that what transactions are not completed immediately. transactions are not completed immediately. Immediately, right? One more point, which is buyer or seller's name is mandatory here, I can say, right? Buyer or seller's name is mandatory. And one more thing I would like to mention here, credit period is available. These are the three I can say characteristics of this credit transaction, which is transactions are not completed immediately. What does it mean by I have written that transactions will not be completed immediately? Because, so for example, we are going to say one shop, and you are the regular customers of that shop. That means you are well known to that person, right, to the vendor, or you can say we are starting our business and some customers will be coming to our shop, and they are our well known customers. Okay, then what we are going to do, we are going to maintain some khata books with which they will be purchasing some goods for the whole month. For the whole month they are going to purchase the goods, and amount is not recognized immediately. After the end of the month, what I will do, I will be totaling the amount which I will calculate the total amount which our customers are due to us, right? Okay, that means we have given them a credit period to pay the money after 30 days. That 30 days is what? 30 days is credit period. Okay, friends. Is the transaction completed immediately? Transaction, in the sense here what I am discussing is, transaction is giving and taking policy, right? We are supplying goods, but our customers, are they paying amount to us directly immediately? No, right? That means the transaction is not at all completing immediately. Then can we say that that is a credit transaction? But one more point I am going to introduce here, that whenever the transactions are not completed immediately, then that doesn't mean that it is a credit transaction. It is not at all a credit transaction. That means always not completing the transaction immediately shall not be mean that it is a credit transaction. But one of the characteristic of a credit transaction is what? Transaction is not completed immediately. Okay. Then what I would like to mention here is credit period is available. Yeah, I have said that we are providing 30 days of period to receive amount or to pay the amount to the vendor through whom we are going to purchase the goods, or to the customer to whom we are going to sell the goods. We will be selling the goods, right? Sending the goods, right? Thereby we are going to receive the amount after 1 month. That 30 days, 1 month time is the credit period is, right? The credit period is what? 30 days here. Then why I have written here buyer or seller's name is mandatory? Because when you are dealing with accounts, without knowing the vendor's name or without knowing the customer's name, you cannot write down any transaction in the accounts. So for the cash transaction, that's in the buyer's name is not required or the seller's name is not required. But when we are dealing with the credit transaction, those names are mandatory for us. That is what the main important point is. Okay, then one more thing. So these are these things are dealt with cash transaction and credit transaction. Then one more thing I would like to mention here. Whenever the proprietor is bringing something in cash, whenever he is going to introduce the capital, that the capital can be in the form of which one? Everyone will be thinking that the person, the proprietor, will be bringing the capital in the form of cash only. But that is they will be bringing the cash also, or they can bring assets into the business. They may bring their own liabilities into the business also, friends. But usually cash is the main thing which they will be bringing into the business, and also of course assets also they are going to bring into business. Whenever anything the proprietor introduces to the business, Whenever the proprietor is introducing something to the business, what we are going to call it as, we are going to call it as capital. Or else what is the another name, what is the another representative personal account for proprietor? Another representative personal account for proprietor is drawings. What does it mean by drawings? I think you know the meaning, the term called drawings. Drawings is not in the sense we are going to draw something. We are not, that means not painting any kind of thing. The drawings in the sense what? The drawings are, we are going to withdraw some amount for our personal use. So what is this proprietor's personal account, right? Capital is a representative personal account. Drawing is also personal account, representative personal account. Then anything withdrawn, anything, I am writing here the definition. That means the meaning for drawings here as part of accounts is going to concern anything withdrawn, either cash or amount from bank, or I can say what, I can say that goods also he can use for anything withdrawn for personal use shall be deemed to be drawings. Drawings in a sense what? Anything withdrawn, either cash or the amount from bank or goods for personal use, friends. For the personal use, if he is going to withdraw something, then it is going to be called as drawings. But what if the amount is withdrawn for office use? It is not called as drawings, it is to be treated for office purpose. That's it. That nothing is more to be discussed with that. With which we have completed our introduction regarding journal. And what I have done is, I have brought you some journal entries. That means for some transaction with which we can pass the journal entries. And before going to pass the journal entries, I would like to discuss you the pro forma for passing the journal entries. Okay. First of all, I would like to draw the pro forma here. So this is somewhat like a box. It will be there. It will be like a box here, and thereby we are going to mention some things here. Here I am going to write date. This is the column for date, or we can say we can write here serial number. And somewhat we are going to prepare here particulars, whereby this is the place. This is the place where we are going to write the journal entries. Like how we are going to write down the journal entries. Simply, if we want to debit some account, we are going to write that A account debit or A account debtor to what, to something account. I can say that if the capital has been introduced, I am going to write capital account, or any account we can write it as a credit transaction, not credit. Not, it is not a credit transaction. To the credit side we are going to write like this, and we are going to write the debit side like this. I have given some space here because we have to mention that this is in the debit side and this is in the credit side. Okay, and I'm going to have mentioned here some one more column and two more columns, right? Here the column is ledger folio number. LF number is what? Ledger folio number. Ledger folio number in the sense what? When we are going to prepare our ledger accounts, the page number, that means it is like a page number. Okay, page number what? Where we are going to prepare some accounts, right? Rama account, Krishna account, any accounts we are going to prepare in some number, like let us say like in a page number 20 of ledger we are preparing the Rama account. And okay, so we are having here A account, right? I'm going to erase these lines so that will be easy for us. Okay, LF number in the sense if the, let us say we have written here 20, but of course this round is not useful. Now A account debtor to capital account we have mentioned here, right? This A account is there. This A account is there in 20th page. Ledger folio number is what? A account has been maintained under page number 20, and of course this capital account might be maintained in 50th page. That may be maintained because ledger folio is not a simple book, friends. It is a very important book which will be having a number of transactions. Okay, then what is the thing here? Debit rupees and credit rupees. This is what debit rupees, and we are writing credit rupees. We have debited A account for some, let us say 5,000 rupees. Then we need to credit the same account. We need to credit the capital account with same amount. That means I'm not saying the total amount which is to be transferred to capital is 5,000. Debit should be equal to credit. Debit always equal to credit. Debit always equal to credit. This is the pro forma for preparation of journal entries, right? What are the 5 columns which we are going to prepare in this journal? Date, particulars, ledger folio number, debit rupees and credit rupees. I think you have understood why we are writing journal ledger folio number. And of course, while we are preparing the ledger accounts, let us say we are going to prepare A account. We are preparing A account. We are going to prepare like this. So A account is being involved for both a debit transaction and also credit transaction. He may be involved or he may not be involved. That is that, as we are having only one entry with regards to A, we are going to prepare simply only one. We are going to prepare for account 2 columns, right? And I can say that 2 sides we are going to prepare the account. This is the debit side and this is the credit side. Whenever A account debit, we are going to write. That means whenever A account is being debited, we are going to transactions. We are going to represent the same transaction in debit side. Whenever, let us say, some purchases has been made by A, okay, or else I can say sales made to A. I am going to maintain that. I am going to add the entry that sales made to A. A rupees 5,000. I am going to write. This is some other transaction and I am writing here sales. So of course sales is there. So we are going to write the sales account data. 1 minute, friends. Okay. We are discussing the credit side, right? So I am going to write purchases account. Purchases made by A, rupees 5,000. Let us take some example. So whenever there purchases has been made, what purchases will be made? Goods will be made as purchases. So purchases goods, or we can say goods purchased by A, rupees 5,000. This is the transaction we are having. So whenever the goods are being purchased by A on credit, I am writing. Why I have written the credit side? In order to bring A into the transaction, I have written the credit side, that I am writing that it is made on credit, so that A's name will be there in the transaction. Okay. Whenever goods purchased by A, the goods are being replaced by purchases, because the word goods shall not be written in the entries. In order to represent the goods, there is only 2 type of transactions. Of course, there are 4 type of accounts which will be replaced with goods. That is also one more point I would like to discuss with you here. Goods shall be replaced with 4 types of accounts. What are those? Purchases, sales, purchase returns and sales returns. Purchases, sales, purchase returns and sales returns. These are the 4 type of transaction, or we can say purchases account, purchase returns account, sales account and sales returns account. These are the 4 type of transaction or 4 type of accounts which will be representing the goods. Okay, whenever the goods are purchased, then we are going to represent the goods in the name of purchases. Whenever we have written the goods which have been purchased, then we are going to write the purchases return account. That means we are going to mention here the purchase returns account. Sales, whenever we have made some sales, we are going to replace the word goods with that of sales account. Same in the case of sales return, when we are going to take the goods back, when the goods which we have sold. That means the customers are returning the goods because they did not like the goods. Okay, then what happens? Sales returns will be also representing the goods account. The goods will be replaced by sales returns account. This is one more thing. Okay, whenever the goods are purchased by A on credit, then what I can say, from okay, I'll explain you whenever the time comes, but this is not required here now. Okay, whenever A account is involved in the debit side in the sense A account data, B account data, whenever something is debited there, something is being debited, then the entry, representative entry will be written in the debit side, in the debit side of the account here. So this is A account. What is the pro forma for A account? This is like ledger pro forma. I would like to mention that one also. Same, I'm going to mention here date. Here also for debit side, both all the columns will be same. Debit side and the credit side, the same columns will be coming. Okay, date I am writing particulars. Same particulars, the column will also be mentioned here. Date, particulars, two columns have been completed, and I am writing here JF number. Can anyone guess what is this JF number? I think I can listen lot of responses from you here. Journal folio number. Why? It is J, right? JF number. Journal folio number, JF number. Same account will be maintained here. Same column will be maintained. JF number and amount. That's it. These are the four columns we are going to mention in this A account. This is what I can say. This whole debit side will be dealing with debit transaction, right? Whenever A account is being debited, we are going to write in the debit side. Whenever A account is credited, we are going to mention in the credit side. So for both debit side and credit side, these four columns will be maintained. But of course, while we are doing the problems, this all data and JF number will not be maintained. When we are going to prepare some accounts like single entry system, we have discussed, right? Thereby we are not going to write all the transaction, all the date here. Dates are not mentioned there, and JF number is also not mentioned, right? This is the pro forma for journal entry, journal and ledger. And of course ledger is not being discussed right now. We are going to see some transactions, some journal transaction through which we can understand whole concept of journal. I have brought you 23 transaction, and of course I have collected it from various sources. Okay, I have collected it from various sources. So what I would like to do, I would like to complete this whole transaction within next I can say half an hour, so that I would like to explain you, right? I need to explain you all this, so for which I have drawn some pro forma. I have brought some pro forma here. So 3 pages pro forma I have brought you, whereby I can complete whole transactions, friends. Let us see the first transaction. Sai Kishore started the business with cash rupees 1 lakh, furniture rupees 50,000, motor car rupees 50,000. We have already discussed who is the Sai Kishore here. Sai Kishore is starting the business. Then can we call Sai Kishore as proprietor? Yeah, definitely we are going to call Sai Kishore as proprietor, and he has brought some value of cash of rupees 1 lakh, furniture assets he has brought into the business. Then when he is going to start the business and he is introducing some cash and furniture into the business, then can we call it as a capital? Yes, we can call it as a capital. Then while identifying the transactions, we need to identify which accounts are dealing with that one. That means there are some accounts, personal accounts, real accounts, they are real that means. And one more thing, in journal entry, it doesn't mean that only one account will be maintained. That means in one transaction. That doesn't mean that only personal account debit we are going to write it, we are going to write it, we are going to create the same personal account. Personal the involvement may be there for any of the combination, either personal account real account can be maintained, real account nominal account can be maintained, personal account and real account nominal account can be maintained. Any type of combination can be maintained, friends. Any type of combination can be maintained. But so thereby we need to what is our agenda. Our agenda is to identify which transaction, which account is it. By identifying which account, we can mention, we can write down the journal entry. Why I have explained you the golden rules? Because whenever we are going to identify the debit side, we are going to identify it as a personal account, and something is being received by us, then we are going to debit side, we are going to write the entry in the debit side. And if the giver is giving the account, if the giver is giving some goods, then we are going to identify it as personal account. We are going to credit the same thing to the personal account, right? Here also say, whenever Sai Kishore is starting the business with cash, furniture and motor car, can we say that the whole amount will be treated like a capital here? Then Sai Kishore is a proprietor. Sai Kishore is a proprietor. He is a personal account, right? Then personal account is being represented with what? Capital account. So capital account is what? It is a personal account. It is, of course, it is a personal account, especially it is a representative personal account. So Sai Kishore is bringing into the business. That can we say that Sai Kishore is the giver to the business. And when we are going to deal with the transaction, then we are going to identify into the point of view of business. Business point of view, we need to think, we need to search. हम बिजनेस पॉइंट ऑफ व्यू में सोचते हैं. ఓకే, వీఆర్ గోయింగ్ టు మనం ఏం చేస్తాం, బిజినెస్ పాయింట్ ఆఫ్ వ్యూలోనే థింక్ చేయాలి. అప్పుడే మనం ట్రాన్సాక్షన్స్ రాయగలుగుతాం, అంతే. ఓకే, దెన్ ట్రాన్సాక్షన్స్. హియర్ వాట్ వీఆర్ గోయింగ్ టు డిస్కస్, Sai Kishore is the giver to the business. Then we are going to what we are this is Sai Kishore is what is a person in the sense personal account. Which personal account we are going to represent the Sai Kishore? Representative personal account. Capital account we are going to mention. Is he a receiver or giver? He is a giver to the business. Then what we are going to do, we are going to credit the giver according to the real account personal account rule, right? We are going to what, we are going to credit the giver. So what I can say here, we are going to credit to capital account, right? I think the screen is visible to you all. I would like to see. Okay, it is visible, or else I'll use another ink. So same blue ink I am going to use, that will be visible to you. To capital account. So credit the giver, the capital. Who is the giver as here? Who is the giver here? The giver is proprietor. Who is proprietor here? Sai Kishore is the proprietor. So we have credited the proprietor. Sorry. What he has done, he has started the business with cash rupees 1 lakh, furniture rupees 50,000 and motor car rupees 50,000. So can we say, can you identify which accounts are these? That means cash is which account, furniture is which account, and motor car is which account? Yeah, it is a real account. Why? Because every real account will be dealing with what? Assets and liabilities. Assets and liabilities will be dealt by real account. As cash is an asset, furniture is an asset, motor car is an asset, we are going to identify it as real account. Okay, what is bringing into the business? Cash and furniture and motor car he is bringing. That means, can we say that business is receiving cash? Can we say that furniture is being received? Can we say that motor car is received? And can we say that cash is coming into the business, furniture is coming into the business? Can we say that motor car is coming into the business? Real account rule is what? Debit what comes in and credit what goes out. What is coming in here? cash is coming in, furniture is coming in, and motor car is coming in. So all three are coming in through the introduction of Sai Kishore capital account. So can we merge all these three transactions into one transaction, friends? Simple account, one account is being credited here, and these three transactions are coming in into the business. That means we are going to debit these three accounts, right? Then can we merge all these three transactions? Yes, we can merge, which is called as compound journal entry. We can individually write cash account data to capital account, we can write furniture account data to capital account, we can write motor car account data to capital account. We can write all these individual transaction, but writing all these individual transaction will be taking much time. In order to reduce our time, what we are going to do, we are going to write this three transaction into a simple one compound journal entry. We can write down, I'll explain you both the ways so that that will be easier for you. But in my aspect, compound journal entry is somewhat better. That will be bringing some impact to the examiner. So first thing is what he is bringing cash into the business. So I'm going to write cash account debtor, or we can say that we are going to pronounce it as what, cash account debtor, furniture account debtor, motor car account debtor. Okay, you can write down these three lines, or you cannot write, that is your wish. But I have a habit of writing like this. So cash account debtor, furniture account debtor, motor account debtor to capital account is the journal entry. So what is the, what, of course I have forgot to write down the headings here. Here we are going to write date. This is the place for particulars. This is what LF number. Here I am going to write debit rupees, credit rupees. So what is the value of cash we are bringing in? We are bringing in the cash of rupees 1 lakh. Furniture amount is what, 50,000 we are bringing in. Motor car, what we are bringing, 50,000 rupees. What is the total amount? This one, 2 lakhs. Right? We are going to credit the whole capital account with what, 2 lakh rupees. That's it. This is the first entry. So that's why we have written 1. In the place of date, you can write here serial number whenever the date is not being mentioned. Okay. Cash account debtor, furniture account debtor, motor account debtor, motor car account debtor to capital account rupees 2 lakh. How can we can also write like this? We can also mention same one. First transaction is what, cash account debtor to capital account. Then furniture account debtor to capital account. Motor car account debtor to capital account. We can also write this individual transaction, and of course this deal with 1 lakh rupees, 1 lakh rupees. This deals with what, 50,000 rupees, 50,000 rupees. This deals with also 50,000 rupees. This is also 50,000 rupees. We can write like that. After completion of the journal entry, we are required to provide narration. For this, this is the second entry, then this is the third entry, right? As we can see, capital account common into the credit side. We have merged this cash account, furniture account, and motor car account in the debit side. That's it. That is the only way we can mention. We have merged the transaction into a compound journal entry. That's it. So narration is what? For this narration, what is the narration for the first transaction? That means for the above transaction, we have written here to capital account, right? So I am writing the narration here. Being, narration will be starting with bracket, and thereby it is going to be started with being. Being what? This is an asset, this is an asset, this is an asset. Being various assets brought into business. Because These are all brought into business, so we can write that it is brought into the business. So what we are going to write the narration for the first transaction, same, being cash brought into the business. Same, furniture is brought into the business and motor car is brought into the business. So this is your first transaction shall be complete. Okay. Then what is the second transaction here? Goods purchased for cash. The second transaction is what? The second transaction is goods purchased for cash, rupees 10,000. This is the transaction right now. Then what would be our journal entry for this? So I'm going to write that entry, that transaction now. Second transaction is what? Goods purchased for cash, rupees 10,000. This is the entry, this is the transaction number 2, right? What we are going to be purchased? We are going to purchase goods. I have already explained you that goods shall be replaced with 4 items. What are those? Purchases, purchase returns, sales and sales returns. These are the 4 transactions which are used to replace goods and which are being used to replace personal accounts. Personal accounts are being replaced by representative personal accounts. What are those? Outstanding expense, prepaid expense, accrued income, advance received income, capital and drawings. These are the 6 items which we are going to represent with in the place of original personal account, right? So whenever we are dealing with goods here, I would like to inform you that in case of business, my question is that can business run without goods? Can business run without goods? This is my question with you. Question for you, okay? Can business run without goods? No, right? Business cannot run without goods. Okay. Then, in as far as accounts is concerned, we are going to treat goods as asset, because without assets there is no business, right? So goods is like an asset to the business. So goods, for the goods we are going to apply real account rule. This is what the thing is. Okay, whenever goods are purchased we are going to apply the real account rule. So not only for purchase transaction, for sale transactions also goods are treated as the assets only, right? Whenever goods are coming in or going out, we are going to treat the goods as asset. Then what is the business doing? Everything is done by the business, right? Then what is business doing? Business is purchasing the goods for cash. So can anyone say what is that, which transaction is this? I mean cash transaction or it is a credit transaction? Can anyone? Yeah, it is cash transaction only. In the cash transaction, is there any linkage with the name of the person? No. So of course here name has also not been provided. So we are not required to look at for the name of the person. So whenever the goods are purchased, what are coming into the business now? Goods are coming in. So debit what comes in according to the real account rule. Debit what comes in, goods are coming in. So goods must be replaced with purchases. Okay, then what we are going to write? Purchases, then we are going to debit the goods. Why? Because those are coming in into the business. We are receiving it in the business. So debit what comes in, Goods are coming in. In the place of goods, we are going to replace with purchases. Purchases account debit. Purchases account debit. And what is the account which we need to credit? They provided us that goods are purchased for cash. That means what is going out of the business. Okay, identify which account is this. I mean real account or personal account or nominal account. Identify which type of account is cash. Absolutely right. Cash account is real account. So whenever real account comes, we need to apply the debit rule or we need to apply the credit rule. But is there a linkage? See, we are purchasing the goods for cash. That means cash is going out. So we need to apply what? Credit what goes out, right? Cash is going out. So credit to cash account. This is the entry. This is the entry. For how much amount? For 10,000 rupees. For 10,000 rupees. Narration being goods purchased for cash. Being goods purchased for cash. What is the third entry now? Let us see the third question. That means the third transaction. Completed. Second one completed now. Goods purchased from Murthy for cash. Rupees 8,000. So the amount is what? 8,000. And also the goods have been purchased. That means goods are coming in. So what we need to do? We are going to debit this one. That means debit what comes in. Goods are coming in. So in place of goods, what we are going to replace? We are going to replace with purchases. So write the entry debit side. Debit entry is what? Purchases account debit. This will be common, right? For only the goods, we are going to replace it with purchases or sales or purchase returns or sales returns. That are the four items which we are going to replace the goods with. So goods have been, I'll erase this pink one so that there will not be any confusion for us. So this is goods. For 1 second friends, what is happening here? Goods so this is the transaction, right? Goods purchased, okay, from Murthy. This is the person's name, but the transaction is what? The transaction is cash here. That means the goods have been purchased. Of course, they have been purchased from Murthy, but transaction is happened through cash itself, right? Then can we say that it is a cash transaction? Absolutely yes. Absolutely yes, right? So in case of cash transaction, is there any linkage with the name of the person? No. So name is not required in this transaction because it is cash transaction. Whenever cash transaction is there, we need to see whether it is a good purchases or sales. That's it. If there is a purchases, that means goods have been purchased. In place of goods, we are required to write the name of purchases. So purchases account debit has been written already. Purchases account debit, we have already written this one. And what we are going to credit? We are going to credit with cash because goods have been purchased from Murthy for cash. Goods purchased from Murthy for cash. That means cash is going out. The cash is going out. So the entry would be what? 8,000. The amount is 8,000. So in the journal entry, we are not required to write the name of the person in case of cash transaction. This is for 8,000 rupees. Narration is in narration where we can mention that we are going to purchase from Murthy. Being goods purchased from Murthy. Being goods purchased from Murthy for cash. Being goods purchased from Murthy for cash. This is the narration. Third entry completed. We can go for fourth transaction now. So shall we see the fourth transaction now? Absolutely. Okay. Fourth transaction. Cash purchases rupees 1,500. Can cash be purchased actually? No. Then what is the purchases the business has been made? Yes, goods have been purchased. Simply what it is. If nothing is mentioned, what purchases have been made, we need to make an assumption that goods have been purchased. So cash purchases in the sense what? Goods have been purchased through cash. See, we can see that for second transaction, third transaction, fourth transaction are similar transactions, because all of the things have of the in all the three transactions, the goods have been purchased and it is a cash transaction. That means we are going to pay with cash. But the line is different. That means the way of asking the question is different here. First thing is what goods purchased for cash. Okay, directly he has given that we have purchased goods through cash. That's it. In the second case, what he has given us that goods purchased from Murthy. The name, in order to confuse us, the examiner asked us, he has given us the name of the person, but it is a cash transaction. We have ignored the name of the person. In case of cash transaction, we are going to ignore the name of the person. The fourth transaction which we are having here is cash purchases rupees 1500. This is the thing, right? So in case of cash purchases, what we are going to purchase? Absolutely goods we are going to purchase, right? Whenever goods are purchased, goods are being replaced with what? The goods will be replaced with purchases. So cash purchases, in the sense what goods are being purchased, the question only gives us it is a cash transaction. So cash is going out according to real account, we are going to credit the cash account, and goods, in the sense asset is coming in debit, what comes in according to real account rule. So purchases account that are to cash account is the entry for the fourth transaction. Purchases account that are to cash account. You can pronounce it in different ways. You can pronounce this entry as purchases account that are to cash account, or purchases account debit to cash account. You can pronounce it in any of the ways. At last you are going to write only the solution. You are not going to ask say the solution to anyone. Being goods purchased for cash, or you can write down the narration again, one more narration. Being cash purchases made you can write down any other narration. I think amount involved is 1500 rupees. Fifth transaction. What is the fifth transaction now? Fifth transaction is purchases rupees 1500. Sorry, 2500. This is the amount of purchases. Purchases, the only word purchases has been mentioned. If the transaction is credit transaction, then he will be mentioning that purchases made on credit, sales made on credit basis. He is going to mention that they have made on credit, but he has not mentioned that it is paid through cash. And also he has not mentioned that goods have been purchased or not. What we are going to assume here, the goods are purchased. The purchases is simply the word purchases is there, so we are going to think that the goods have been purchased. So goods are replaced with purchases. That means purchases, that means goods are coming into the business. Debit what comes in according to the real account rule. So debit the account of purchases. Fifth transaction, so purchases account debit. Purchases account debit to what? To the credit item. What is that credit item which we need to record here? See, purchases has been made. Did he mention about cash transaction or credit transaction? No. What we are going to assume? We are going to assume it is a cash transaction. That means amount has been paid through cash. Amount 2500. So cash is going out of the business. So credit cash account with 2500 rupees. Simply what is the entry? Purchases account at R2. Cash account being purchases made. I think 2500 is the amount. Usually this ledger folio column is not being filled. That will not be filled. Why we are going to solve the problems in this one. Credit rupees 2000 rupees, right? Here The goods, okay, I'm not, that is not Shruti, that is Sarathi. It is Sarathi. The goods have been purchased from Sarathi on credit. That means, can I say it is a cash transaction or credit transaction? What can I call it as? I can call it as a credit transaction. I have already informed you. In case of credit transaction, we need to be very, very, very careful, whereby we need to identify the person's name from whom we are purchasing or to whom we are going to sell the goods. Okay, then goods purchased from from Sarathi on credit rupees 2000 is the transaction mentioned. So what are the goods, what are the purchases have been made? Goods have been purchased. Goods are like that of asset to the business, so we are required to apply real account rule for purchasing of the goods. What are the coming, what are coming in? Debit what comes in, goods are coming in, so debit the goods. Goods account has to be debited. In order to debit the goods account has to be replaced with what? Goods account has to be replaced with the name of purchases. Okay, what I can write here now, the debit side I am writing sixth transaction, which is purchases account. Okay, I have written purchases account debit. Then I need to write credit transaction like to some account, right? Which account we need to credit here? Did he did we give the cash directly to the Sarathi? No, we have given, we have not given any amount of 2000 rupees to Sarathi. We have not given. That means the transaction has not at all completed right now. So it is a credit transaction. Then we need to involve the person's name there. So from whom we have purchased the goods? We have purchased the goods from Sarathi. So we need to credit Sarathi and we need to make him as a creditor. I think you know the difference between debtor and a creditor. Okay, what does it mean by debtor? If amount is receivable from someone by us, okay, we have let us assume that we have made sales on credit for rupees 1000 rupees to some person X, then X is what we can call X as a debtor for us, because the amount is receivable from that debtor. Okay, then we will be like let us say I'm Vishwanath. I have sold the goods to Mr. X on credit for rupees 1000. Then X is like a debtor because I have sold him on credit basis. So X is called as a debtor for X. Vishwanath myself is going to be called as a creditor for him. So in one transaction there will be a debtor and creditor relationship exists. In a credit transaction, debtor and creditor relationship will be established. So here what happened? Goods have been purchased from Sarathi on credit basis, right? Then goods purchased from Sarathi. So goods have to be replaced with what? Purchases. So purchases account debtor to what account? To cash account is not required. We are not required to write cash because we haven't paid cash here. We are liable to pay to Sarathi, so we are going to make him as a creditor. For creditor, what will be the balance for us? Credit balance. So to Sarathi account we need to write to Sarathi account for rupees 2000 is the amount which we are due to Sarathi. So narration being goods purchased from Sarathi on credit. We can write any narration. Narration is mandatory. Small narration is also satisfied. Nothing happens. So we are going to now go for seventh transaction, which is goods purchased. Okay, goods have been purchased. So debit what comes in, goods are coming in. So we are going to debit the goods account, but with the name of purchases. So purchases account debtor and amount paid by check rupees 7500. Simply you can, I have said that we can complete the transaction by making the transaction through cash or through check, like that is account pay check we can say, or you can pay through UPI also, banking channels. So we cannot write like directly to check account. Check account is not maintained. Where we are going to deposit the checks? We are going to deposit the checks in bank, right? And amount paid by the check means we are going to give our check to somebody, to the creditor, from the trader, to the from whom we are going to purchase the goods, and he is going to deposit the check in the bank itself, right? So if the name check, if the transaction is dealt with check, then we are going to replace check by the name bank. This is what important one. So goods are purchased, debit what comes in, so goods purchased in the sense real account rule, debit what comes in, goods are coming in, so purchases account return, because purchases are replaced by, goods are replaced by what, purchases account. And amount paid through check, what is going out, amount is going out in the form of check. Check we are going to replace with bank account, so purchases account return to bank account 7,500. So I am writing an entry purchases, because the goods are purchased, purchases account return to bank account. A narration I am writing first one being goods purchased and amount. Okay, you are not required to write like this short forms. Amount paid through check. For cash transaction, the name of the person is not required. But for credit transaction, debtor and creditor relationship will be established, for which we need to mention the debtors and creditor's name also. So for 7,500 amount has been paid through check. Okay, I'm going to go for now 8th transaction. I hope you have understood this transaction now. Goods sold for cash. So up to now we have seen what? We have seen the capital transaction. That means if the amount has been brought by the proprietor to the business, that means if any amount has been introduced to the business, then it will be going to called as a capital. But of course it is called as a capital when it is brought by the proprietor into the business. Okay, we have seen up to 7 transaction. That means 2 to 7 transaction. We have seen various transactions regarding purchases, like goods purchased through cash or through check or from on credit from any person. We have seen, we have dealt with transaction like if the cash purchases is there, then we need to assume that we have purchased the goods through cash. If simple word purchases has been given, then we have to assume that goods have been purchased, but of course the cash transaction is made. That is not a credit transaction. If the credit transaction is there, then they will be giving us the name of the person. That is what we need to assume. Then now we shall go for 8th transaction, which is goods sold for cash rupees 3,000. What we are doing? We are selling our goods. Goods are nothing but like assets, right? So we are going to apply what? We are going to apply real account rule. Real account rule is what? Debit what comes in and credit what goes out. So we are making sales, right? We are making sales. That means what is going out of the business? Goods are going out of the business. I have told you that when goods are in the transaction, then we need to replace the goods with 4 accounts: purchases, sales, purchase returns, and sales returns. These are the 4 items which we are going to replace the goods account, right? When the goods are being sold, then can we replace goods with sales account? So goods are to be replaced with what? Sales. Sales. Okay, goods are being replaced with sales. And of course for cash rupees 3,000, that means it is a cash transaction. We haven't sold on credit basis, so cash is coming in. When we make sales, then we are going to receive the cash. What is coming in? So cash is an asset, so asset is nothing but real account rule. Real account rule is what? Debit what comes in and credit what goes out. So cash is coming in, so debit the cash account. Goods are sold, so goods account we are going to credit, but in the name of goods we are going to write sales account, simply because sales is an income. Income is always having credit balance. Debit all expenses and losses, credit all incomes and gains. Sales is nothing but like what? Sales is nothing but it is a nominal account, right? But of course goods are being replaced with sales, so we can apply both the real account rule and a nominal account rule also possible, right? So sales is nothing but income for us, so income we are going to credit because debit all expenses and losses and credit all incomes and gains. Sales is an income, we are going to credit the sales account. What is coming in? Cash is coming in account real account rule, we are going to debit the cash account. 8th transaction is what? 8th transaction, Okay, let us see the amount of the transaction, which is 3000 rupees. So can I write here eighth transaction? I'm writing here. Okay, so what is the thing? Goods sold on goods sold through cash. I think, I hope that is the transaction. Yeah, goods sold for cash rupees 3000. So I'll write the transaction again here. Goods sold for cash rupees 3000. This is the thing. So goods are being replaced with sales account. Cash is coming in, so debit the cash. Sales is we are receiving the sales, that means we are receiving the income, so credit the income account. We are required to credit the transaction. So cash account debtor to sales account. Whenever we are making sales, we are going to credit the sales account. Being sales made through cash. Or we can write on the narration again, one more narration. Being sales made in nothing but we are going to make the sales of goods. Being goods sold for cash. We can write any of the narration. For amount, what is the amount? Rupees 3000 is the amount. 3000 is the amount. We have completed 8th transaction also. Now we can go for 9th transaction, which is goods sold to Ram Kumar for cash. Simply, very simple, same transaction, but here the name of person is mentioned. In order to confuse us, they have mentioned the name. Why? Because it is cash transaction, because we can identify that it is made on for cash. Sold goods to Ram Kumar for cash rupees 5000. So amount does not matter here, but of course amount we are going to write in the amount column directly. Goods sold to Ram Kumar for cash. So what is coming in? Cash is coming in. What are we going to do? We are going to sell the goods. That means goods are like an asset. Asset is going good, so credit what goes out, so credit the goods account. Or we are making sales. Sales is like an income. Income we are going to credit account the nominal rule. Creditor incomes and gains, we can apply both rules here. Either you can apply real account rule or you can apply nominal account rule also. So goods sold to Ram Kumar for cash rupees 5000. So what is the account we are going? I'll write the transaction. 9th transaction, which is goods sold to Ram Kumar for cash rupees 5000. This is the question, right? So can I write here that goods are sold, then can I replace with goods with sales? Absolutely yes. To Ram Kumar it has been sold, but for cash it is sold. It is not a credit transaction, it is a cash transaction, so cash is coming in. So we are going to write what? We are going to debit the cash account because cash is coming in. Debit or what comes in, credit what goes out. Goods are going out, so credit. Or else you can apply nominal account rule. Sales are coming in, that means sales is an income for us, so credit all incomes and gains. That will be our solution. So cash account debit to sales account is the entry. Simply being goods, and of course in narration you can mention the Ram Kumar's name. Being goods sold to Ram Kumar for cash rupees 5000. And of course here the heading will be what? Same heading. Here we are going to write date or serial number and same particulars. This is the second column for particulars, whereby we are going to write out the journal entry. This is LF number, ledger folio number, ledger folio number. This is what? Debit transaction rupees, debit rupees, and here credit rupees. We have completed our 9th transaction also. Can we go for the 10th transaction? Absolutely. Cash sales made for rupees 6000. Cash sales rupees 6000. What does it mean by cash sales actually? Can we sell the cash? No. What we are going to sell? We are going to sell the goods. Cash purchases Same as the case of cash sales. We are making sales, we are purchasing the we are making sales of goods, we are purchasing the goods. Simply same transaction. So can I write that cash sales is nothing but goods sold? So goods sold for cash is the same entry. Whenever goods are sold for cash, so cash is coming in, so we are going to debit the cash account. Whenever goods are going to sold, whenever goods are sold, then we are going to replace goods with sales account. So sales account is credited here. So debit the cash account and credit the sales account. Cash account at R2, sales account is the entry. So 10th transaction, same entry. Cash account at R2, sales account is the entry for rupees 6,000. Being narration, I am writing being cash sales made, or we can write other narration that goods are sold for cash. Any narration is sufficient. Now we can go for 11th transaction, which is sales rupees 9,000. There we have seen purchases rupees some amount. Purchases rupees 2,500. Sales rupees 9,000 in the sense what we are going to sell the goods. Sell the goods. Goods are sold, so we are going to what is going out, goods are going out, so credit the goods account with sales. Okay, we are going to replace goods account with sales account, so to sales account. My question is, which transaction is this? I'm asking about which transaction is nothing but is it a cash transaction or it is a credit transaction? That is my intention. So whether it is a cash transaction or it is a credit transaction. Yes, it is a cash transaction, because if the credit transaction is there, if it is a credit transaction, then he will be mentioning as the name of the person to whom we are selling the goods. If it is a purchase transaction, then he is going to mention as the name of the person from whom we are going to purchase the goods. So sales rupees 9,000 in the sense we are making sale of goods for rupees 9,000 in cash. Same entry, right? 9,000 is the same, value is 9,000. So can I write the entry cash account at R2, sales account? Same transaction, so I am not explaining you once again clearly. So being sales made rupees 9k, 9,000 is 9k, right? K is 1,000. Now comes the second 12th transaction. From now on we are going to do it very carefully. So 10th and 11 completed, goods sold to Ram on credit basis. Same here, credit basis has been made. So it is a credit transaction. I think you have come to know. What are we going to sell? We are going to sell the goods. So goods are replaced with what? Sales account, right? So sales account it is being credited because goods are going out according to real account rule. Credit what goes out. So sales account is being credited. To whom we are going to sell the goods? Okay, we are going to sell the goods to Ram. But it is a cash transaction or credit transaction? Credit transaction is being mentioned. So we are going to make credit transaction to Ram. That means via sales. So we are going to include the name of Ram into the transaction, into the journal entry. To whom we are going to make sales? We are going to make the sales to Ram. So my question is whether Ram is called as a creditor or debtor to the business. I'll tell you the answer. Ram is called as a debtor because we are making sales and amount is receivable from Ram. The person from whom the amount is receivable, then we are going to make that respected person as debtor for us because the amount is receivable from them. So amount of rupees 3,000 is receivable from Ram. So we are going to make Ram as a debtor. For debtor, we are going to have debit balance. So Ram account at R2, sales account is the entry. Simply Ram account at R2, sales account. Or you can think into the another point of view also. I'll explain you the same. So I'm writing the journal entry. First of all, Ram account at R2, sales. Narration is what? Being sales made to Ram on credit. What is the amount? I think 3000 or something is the amount. Yeah, 3000. Now comes one more logic for this Ram account data. Why we have debited Ram account? The name of the person has been mentioned. Okay, we are making sales to some person called as Ram. So can we call Ram as a receiver? Because he is receiving the goods, can we call Ram as a receiver? Yeah, yes, right. We can say that Ram is a receiver, so debit the receiver and credit the giver according to the personal account rule. Ram is a person. The name of the person has been mentioned. So debit the receiver. Ram is the receiver of the goods. So can we debit him? Yes, absolutely. So debit the receiver according to the personal account rule. So Ram account has been debited and we are going to make sales account as a credit side in the credit side, because nominal account sales is an income. According to the nominal account we can make credit all expense incomes and gains. I'm sorry, debit all expenses and losses, credit all incomes and gains. Or else we are making sales of goods. Goods are like assets. Assets is going out, so credit what goes out, we can make goods account as credit side. Goods are being replaced with sales. So three type of ideas can be done through for the single transaction. Okay, then I have completed 12th transaction also. I think I have written narration here. Can we go for 13th transaction? No, I would so try to do this entry now. Goods sold and amount received by check rupees 8000. While solving any entry, while writing any entry, you are required to know three type of questions. I am going to write those questions. First question, is it a cash transaction or credit transaction? This is the first thing which we are required to know. Is it a cash transaction or it is a credit transaction? That's why I'm asking you from the beginning of the transactions whether it is a cash transaction or a credit transaction, because with the credit transaction or cash transaction we are going to identify the name of the person. Okay, either we are required to debit the credit the name of the person or not. Next, identify. Second thing is identify the accounts. Identify accounts in the sense what? Personal, real or nominal account. From many of the transactions from which we are discussed, we have seen personal and real account maximum. Of course, purchases and sales are also nominal accounts. So that means we have already seen all these three type of accounts. Thereby, third one is what we are required to identify golden rules also. Not identify, implement the golden rules. Implement golden rules regarding that transaction. This all have to be done simultaneously to write correct journal entry. Now, goods sold and amount received by check. First question is what? Is it a cash transaction or it is a credit transaction? Is there any involvement of name here? If the name is coming in into the transaction, then we need to stop immediately and we need to think whether it is a cash transaction or a credit transaction. Here, the name has not been implemented in this transaction, so there is no need of any question that it is a credit transaction. It is definitely will be a cash transaction, friends. But of course, the amount is received by check here. So what is coming in? Check is nothing but bank. Bank account is like what? It is an bank is like an asset, right? Bank is like an asset. Bank account is personal account. Bank amount, bank balance. I'll write here that bank balance and bank account. Bank balance is nothing but asset. Bank account is personal account. Of course, bank OD will also be there. Bank overdraft will be there. Bank overdraft is like a liability because we are required to pay amount to the bank. So bank overdraft is a liability. Bank balance is an asset. If simply bank is mentioned, then we need to assume that it is a asset. Bank account, if that amount, if the entry has been involved with bank, then we need to think whether it is a personal account or real account. Now my question is, goods sold and amount received by check rupees 8,000. So check is coming in because we are receiving check by selling the goods. So debit what comes in, we are required to debit the check account, but we are going to replace check by bank. So bank account we are going to debit because it is coming in debit what comes in according to the real account rule. Now goods sold and amount received by check. So goods are being sold, so credit what goes out, goods are going out. So credit goods account by name of sales, so sales account is credited. So bank account that after sales account is the entry. 13th transaction, so bank account data to sales account being goods sold and amount received by check. Amount is what? 8,000. I hope you are recording all these entries. Otherwise, you are required to know about all these entries. If you know all these entries, so you can definitely crack any of the entries. Okay. Of course, I am not saying that you can write any type of entries, but you can write any type of entry by knowing the golden rules of the accounting. 1 second, friends. Okay. Now comes, or you can go for 14th transaction, which is cash paid to Pratap rupees 5,000. Cash is paid to Pratap for rupees 5,000. Okay, who is the receiver here? Pratap is the receiver because Pratap name is what? It is the name of the person. It is a personal account rule. So we are required to apply the personal account rule. What is personal account rule? Debit the receiver, credit the giver. Is Pratap a receiver or giver? Yes, Pratap is a receiver because we are paying amount to Pratap. So Pratap is the receiver of that amount. So debit the Pratap account. It is not a cash transaction or a credit. It is a cash transaction. Of course, we need to identify whether it is a cash transaction or a credit transaction when the name entry is with purchases or sales. As we are making payment of cash, so we are not required to here the involvement of goods is not there. If the goods have been involved, then we need to think whether it is a cash transaction or credit transaction. Then because at the time of purchases or sales only we are going to identify whether it is a cash transaction or credit transaction, right? Cash is paid to Pratap rupees 5,000 is being mentioned now. So can we assume, can we debit the Pratap account? Because Pratap is the receiver, so we can debit the personal account rule. According to personal account rule, we are going to debit the receiver. So Pratap account is being debited. So debit the Pratap account. Debit in the sense DR. Cash is paid. So cash is paid means what? We are going to credit the cash account because it is going out. Cash is going out according to the real account rule. Debit what comes in and credit what goes out. So cash is going out. We are going to credit the cash account. So Pratap account at R to cash account is the journal entry. 14th transaction. I hope it is. Yeah, it is 14th transaction. I'm going to identify with another in. So Pratap is the receiver, so we are going to debit the Pratap account. So Pratap account at R, and what is going out? Cash is going out. So to cash account we are going to write being narration, being cash paid to Pratap. So being cash is paid to Pratap. Identify the amount. Identify amount is what, 5,000 rupees. So 5,000 is the amount here. 5,000 is the amount which we are going to credit. The same amount. 15th transaction we can go through. What is 15th transaction? Cash received from Kalyan. Rupees 2,000. So who is the receiver now? We are the receivers. We are the receivers. But we don't know our name. Don't write that it is a Kalyan. That means Sai Kishore is not the proprietor here. That is another transaction. This is another transaction because it is not a single person, single business. Transaction is of different businesses. So cash is being received from Kalyan. That means who is the receiver or who is the giver here? Kalyan is the giver, right? Because he is giving us the amount. So can we credit the Kalyan account? Because he is a giver according to the personal account rule. Debit the receiver and credit the giver. So we can credit the Kalyan account by rupees 2,000. But what we are required to debit here? Cash is being received. So according to the real account rule, debit what comes in and credit what goes out. So cash is coming in, we are going to debit the cash account. So cash account added to Kalyan account is the entry for rupees 2,000. So cash is coming in, so cash account debit to Kalyan. Kalyan is the giver, so we are going to credit the Kalyan account by rupees 2,000. So I'm going to write the same amount 2,000 being amount, or we can write cash also, being amount or cash received from Kalyan, bro. So Kalyan is the person, right? Now comes 16th transaction. 16th transaction. Okay. Up to now we have seen whether it is a cash paid or payment made or payment received. And we have identified whether goods are being sold or anything being sold. We have identified capital also. Now we are going to see drawing transactions. What is the thing here? Cash withdrawn from bank. Okay. Whenever the word withdraw has been there, we need to identify whether it is personal transaction or it is an office transaction. That means whether the amount has been, whether the drawings have been made for personal use or official purpose. The office or office use, I can write it here. We need to identify whether it is a personal use. That means whenever drawings have been made, we need to identify whether it is made for personal use or it is made for office use. Whenever personal use is being made, then we are going to use the name of drawings here. Whenever office use is being made, that means what, whenever drawings have been made for office use, then we are not required to implement the name of drawings. We are required to see another things here. That means what? Let us see the question once again. Cash withdrawn from bank for office use. Of course, this transaction is somewhat different from all the remaining transaction because it is like a contra entry which we are going to see in cash book. Okay, contra entry. It is like a contra entry. What does it mean by contra entry? The contra entry is the sense it is being involved with both cash account and bank account. Okay, contra entry. Like what is the entry? What is the entry for this transaction? Cash is withdrawn from bank for office use, friends. It is being made for office use. Can I say it is a office purpose? It is for office purpose. Then what accounts we are required to implement? So I'm going to write the transaction down. Cash withdrawn from bank for office use for rupees 6,000. So cash withdrawn from office use for rupees 6,000 is the, not for rupees 6,000 is the amount. 1 second friends, let me drink some water. Okay. Cash withdrawn from bank for office use. Cash withdrawn from bank for office use. Rupees 6,000 is the question. So what is being withdrawn? Cash is being withdrawn. So what is coming in into the business? Cash is coming into the business. So we are going to debit the cash, because debit what comes in, cash is coming into the business. So we are going to debit cash account. Okay, debit the cash account. From where we are withdrawing this amount? From bank, right? But for office use, so we are not going to implement the name of drawings here, because it is not a personal transaction. If the personal transaction is there, so we are going to implement the representative personal accounts, whether it is a capital or drawings. First transaction, Sai Kishore has started the business with cash rupees 1 lakh, furniture rupees 50,000, motor car rupees 50,000. Thereby we have used the name of the word capital. Here, do we require to use a drawings account here? No, because it is for official purpose. So cash is being withdrawn. Cash is being withdrawn in the sense we are receiving the cash from bank. As we are receiving the cash, we are required to debit. We are required to debit cash account, because cash is coming in according to the real account rule. So cash account has been debited. Which account we need to credit here? From bank it is being withdrawn. So bank is the giver, right? From bank, in the sense we are required to assume that it is a personal account of business. So we are withdrawing that amount from from personal account. We are withdrawing for official purpose. From personal account we are withdrawing for official purpose. So bank is the giver for us. We are required to credit bank account. Cash account debtor to bank account rupees 6,000. Narration, you can write the same thing here by introduction, by introducing being cash withdrawn from bank for personal purpose. Of course, you are not required to extend this one. Okay, I'll write the narration, no problem. Being cash withdrawn from bank for office use, 6,000 rupees. Now 17th transaction, sixteenth completed. Now we are going to go for 17th transaction, which is cash withdrawn for personal use from bank rupees 2,000 friends. Same transaction, but it is for personal use. If the personal use word has been maintained, so we need to introduce the word drawings. Drawings we need to introduce, but where we are required to introduce? Do we require to introduce in the debit side, or you are required to do in the credit side? Okay, cash is being withdrawn, right? Drawings will always be having a debit balance. Debit side we are going to write. Why? Because cash is being withdrawn for personal use. We are withdrawing cash, so cash is coming in into the business. Or else we can think that cash is coming into the personal purpose, for the proprietor is coming in. As it is related to proprietor for personal use, we are going to debit his account, right? So we are going to write proprietor's account. So proprietor's account is being replaced with what? Drawings account. So as it is a debit balance, we are going to write drawings account, or it is being withdrawn by the proprietor for his personal use. So debit what? Debit the receiver. Cash is being received by the proprietor. So debit what? Debit the receiver, in the sense what? Debit the proprietor's account. Proprietor's account is being replaced with what? Drawings. So drawings account at our, from bank we are going to withdraw the amount. So we are going to create the bank account. Okay, so drawings account data to bank account is the entry for rupees 2000. 18th 17th transaction, we are going to introduce the name of drawings. So drawings account data to bank account is the entry to bank account rupees 2000 being drawings made from bank for personal purpose, for personal use. Now comes 18th transaction, 8 9 10. Okay, and again 6 transactions are left, we can complete easily. Now wages paid through cash. Shall we go for this transaction, friends? Yeah, wages paid through cash rupees 800 is the transaction. What we are paying? We are paying wages. Is it an expenditure or income? Wages are being paid by us. We are paying, suppose you are a business, or you can say you are a proprietor now. You are paying the amount to laborers. The amount which is paid to laborers is known as wages. Is it an expenditure or income to you? Giving the amount is like an expenditure, right? To the some person, we are paying the amount to them. So it is an expenditure for us in the form of wages. So according to the nominal account, what is whenever we identify expenses, losses, incomes and gains, we are required to apply nominal account rule. So exactly nominal account is being maintained here. So can I write here now wages paid through cash, in the sense cash is going out. So can we credit the cash account now? Because it is going through cash, we are paying the amount through cash in the form of wages. According to the real account rule, can we credit what goes out? Cash is going out, so can we credit the cash account? Yeah, we can credit. Then what we need to debit? We are required to debit wages account, because debit all expenses and losses. Wages is an expenditure, but it is not a loss, friends. We are required to debit wages account because it is an expenditure. Debit all expenses and losses, credit all incomes and gains. So debit the wages account and credit the cash account. So wages account data to cash account rupees 800. 18th entry, wages account data to cash account. Narration being wages paid through cash. Being wages paid through cash rupees, how much? 800. Now comes the 9th transaction. I hope you have understood the transaction, so we can tick 18th one also. Now salary received rupees 9000 in cash. So what is coming into the business? Salary is coming in the form of cash. We are persons now. We are working to some other firm, some other business. We are working for them. So for which we are going to receive the cash in the form of salary. So can we say that cash is receipt? Receipt is like an income, right? Salary is in income now. So credit the income account by name of salary. Credit all incomes and gains. So salary account being credited in the form of cash, it is coming in. So debit what comes in? Cash is coming into the business. So cash account data to salary account is the entry for rupees 9000. So cash is coming in, so debit the cash account. So cash account data to salary account, because we are receiving the amount in the form of salary. Salary is like what? It is an income for us. As it is an income account, we are going to credit the income account according to the nominal account rule. Being amount received, or we can write directly the entry that being salary is received through cash. Salary received through cash rupees 9000, friends. This is the entry, right? Now comes the 20th transaction. I hope you have understood this transaction. Now comes goods withdrawn for personal use. I have already told you that whenever capital or drawings is been there, we can introduce to the business cash, or we can introduce goods to the business, we can introduce assets into the business. So whenever goods are being withdrawn, so we can withdraw cash account, cash also we can withdraw, we can withdraw assets also, we can withdraw goods also. But my question is, from where we are going to withdraw the goods? That means we are having some sort of goods in the business from which we are withdrawing some part of the goods. Can we say that the goods from which we are withdrawing as purchases? Because the goods which we are having is like purchases we have made. From any trader we have made the purchases. So from the purchases we are withdrawing some sort of goods now. So can we say that the drawings have been made from purchases now? Goods have been withdrawn for personal use, it is there, right? Yeah, it is a personal use. So can we link with the purchases account now? Because goods are being withdrawn from purchases only. From sales we are going to make the sales, but from the goods have been withdrawn, that means the goods must have been purchased from somebody else. So we are directly withdrawing the amount from purchases. So now goods have been withdrawn for personal use, in the sense we are going to introduce capital accounts, or not capital account, is a drawings account we are going to introduce, right? Personal account, in the sense we are introducing drawings. So goods have been withdrawn something, that means we are receiving the goods now. So debit the drawings account. So drawings account is to be debited. So drawings account debtor. To which account we are going to credit now? Here cash is not being withdrawn, so we are not required to write the cash account in the credit side. But we are amount, of course, from bank also we are not withdrawing the amount, so we are not required to write the bank account also. What is the account which we are required to write here? We are required to write purchases account, because we are withdrawing goods from purchases, so it is from purchases. Rupees 2000 being purchases made, no, being goods withdrawn for PU in the sense personal use. I'm going to now go for 21st transaction. Amount withdrawn from bank rupees 5000. This is the transaction, very important one, and they have not mentioned that whether it is withdrawn for personal use or whether it is withdrawn for official purpose. If nothing is mentioned, we are required to assume it in the point of view of official purpose only. But if it is made for personal use, then he will be definitely mentioning it. For drawing personal use, if the personal use has been made, that means if the amount has been withdrawn for personal use, then he will be definitely mentioning us that it is made for personal purposes. As it is not being mentioned here, then can we think that it is made for office purpose? Office purpose only it is made, official purpose. So for office purpose, whenever it is made for, whenever withdrawing, so that means whenever drawings have been made for official purpose, then can we write that can we introduce the name of the drawings account here? No, because it is made for office purpose. So what is being withdrawn? Amount withdrawn, in the sense what we are withdrawing cash into the business, from the business or from the bank account, bank for personal account we are withdrawing for office purpose. So what is coming in into the business? Cash is coming into the business. So cash account we are going to debit, because debit what comes in account, the real account rule. Amount is coming in the sense cash is coming in. So debit what comes in, cash is coming in. So debit the cash account by rupees 500. So cash account we are going to debit. So cash account debtor rupees 500 is the amount. But which account we are going to credit now? From which account we are being withdrawing this amount? We are withdrawing the amount from bank, so we are going to make bank account as a giver, right? Because bank account is like an personal account. From bank account we are withdrawing the amount, so it is a personal account. We are going to credit the giver according to the personal account rule. So bank account is the giver, we are going to credit the bank account for 500 to bank account, 500 rupees amount. Narration being, you can write the same the transaction you can directly implement here, being amount withdrawn from bank. And of course in narration you can mention that for office purpose or for office use you can maintain this one. Now comes the 22nd last but one transaction. What is that one? Cash paid into bank. And of course here that nothing is mentioned, so can we write it is an office purpose? Yes. And the last one also, cash deposited into bank, office purpose only, because if it is made for personal purpose, he will be mentioning as the name that it is being made for personal use. As it has not been mentioned that it is a personal use, so then we are required to assume that it is made for official purpose. So cash is being paid into bank, cash paid into the bank in this much. We are paying our cash to the bank account. That means we are depositing the amount to cash to the bank account. So officially what we can say, we can say that this both transactions are same. Cash paid into the bank is same as that of cash deposited into the bank. Cash payment is nothing but we are paying the amount to the bank. Cash deposited into bank in a sense we are depositing our cash to bank account. In the bank account we are depositing. So what we can say, bank is the receiver. Here also bank is the receiver. So can we, I'll write the same entries for both 22nd and 23rd, because the both two transactions are same. Paid is nothing but deposited. Paid is nothing but is equal to deposited whenever it is dealing with the cash or bank. Amount paid to bank, or amount cash paid to bank, or amount deposited into bank, or cash deposited into bank, all four things are same. So cash paid into the bank in a sense, amount is paid into the bank, so bank is the receiver because bank account is personal account. Debit the receiver account, the personal account rule. So bank account at R2, cash account is the entry because cash is being paid to the bank. So cash is going out of the business. So credit what goes out. Cash is going out. So credit the cash account. Debit the bank account. So bank account at R2, cash account is the entry. 22nd and 23rd also same entries, right? So bank account is, bank is the receiver. So we are going to debit the bank account. Cash is going out to cash account. We are going to write to cash. Narration being cash paid into bank. And of course this is also a contra entry, and bank account at R2, cash account, right? So this is also contra entry. Contra entry we are going to represent with C in braces. 23rd also is what? Contra entry, because it is cash deposited. Cash deposited into bank in the sense what? Cash is being deposited into bank. Bank is the receiver of our cash. So we are paying the cash. So cash is going out in the form of through to bank account. So bank is the receiver. Debit the receiver account to the personal account rule. Bank account at R. What is going out of the business? Cash is going out of the business. So we are going to credit the bank cash account, being cash deposited into bank. This is the entry. What is the amount involved here? 1000 and 5000. Simply same amount we are going to record here. This is 1000. This is also 1000. This is 1000. This is also, this is 5000. This is also 5000. So same entry we are going to write here, because cash payment or cash paid or cash deposited or amount paid or amount deposited all are same into bank. If it is made to bank, then we are going to assume that all transactions are the same. So these are the entries. These are the 23 transactions which I would like to discuss with you, which I have already discussed with you. So with this knowledge, I think you can go through any of the transactions, you can write any of the journal entries. I hope so. Yeah, it is like jumbled letters. Simply by knowing all these to 1 to 3 account rules, you can write any sort of journal entry. Of course, your three questions you need to think again. Is it a cash transaction or a credit transaction? Identify the accounts. Third thing, apply the golden rules. These are the three things which we are required to identify. If it is a cash transaction or credit transaction, at the time of what? At the time of goods purchased or sold, we are going to identify whether it is a cash transaction or credit transaction. Whenever drawings has been intimated for us, then we are going to identify it is made for personal use or office use. If it is made for office use, we are not going to replace for office use. We are not going to use the name of drawings. Drawings is not used for personal purpose. Drawings is used because it is drawings is used for personal purpose. Then personal purpose, it is nothing but it is for proprietor. If it is for proprietor, we are going to replace proprietor with the name of drawings, because drawings and capital are representative personal accounts. That's it friends, that's it for this video. So I think you have understood how to write the journal entries. From the next in the next video, we are going to cover our ICAI study material, chartered accountancy course. From that study material I have downloaded that one, and I would like to show you that one also. But in the next video I am going to introduce with that also. 1 second friends. Yeah, 1 second. Yeah, okay. This is the material of ICAI. Here you can see Chartered Accountants of India. You can see the material's name. From where I have collected this material, you can go through ICAI website to collect this entry, to collect this material. You can go through there, and of course in the next video I'm going to introduce with accounting equation also. Right, that's it friends, that's it for this video. If you like my videos, please subscribe my channel. Thank you friends, thank you for watching.